Welcome back to the Dividend Diplomats. You know your boys, Bert and Lanny, the dividend investors here in the YouTube community, guys. And boy, do we got a stock to talk to you about right now in the stock market.
Before we talk to you about this Dividend King, if you haven't already, smash that subscribe button. Give us that thumbs up. Everybody, let's go. We've hit 14,000. Now let's get to 15,000, then 16. You know the drill, everybody. We appreciate the love and support because on our way to financial freedom, we are talking about every dividend stock we can possibly take a look at to see if it's a stock to buy.
And this could be a stock to buy right now as the news comes out on the next inflation numbers here, as the potential recession bell may ring by the end of this month here in July. Guys, we're talking about dividend stocks to buy. And as Bert just hinted at, we are talking about not just a dividend stock, not just a dividend aristocrat, but a dividend king. Bert, you want to educate the community on what a dividend king is?
Nope. I'm kidding. Yeah, here we go. All right. A Dividend King is a company that's increased its dividend for 50 plus consecutive years. So everyone think about that. Think of how many economic cycles we have gone through over the last 50 years. The good times, man, we've gone through the pandemic now. Well, we're still in, but you know what I mean with that from the financial time. We've gone through the great financial crisis. We've gone through the dot-com busting. We've gone through the slowdown of the early 90s, the savings and loan crisis in the 80s. You get the drift by now. The point is, these companies, Dividend Kings, have shown that they can increase their dividend through good times and bads, and they have demonstrated it by getting through many bad cycles.
Yeah, you're not wrong there, Bert. So this stock has been through it all. And, it's interesting because Bert and I, we were just talking, obviously SoFi, the new fintech, great now bank, because they have now a banking charter. Very cool. They actually purchased what this industry of this stock is that we're about to talk about, but they did acquire a core processing company. And that's exactly who we're really talking about today, is a core processor in the IT business service arena, primarily in the banking industry as well. Bert, we couldn't get too far away from our favorite industry.
No, we're always in there. And I mean, that's really where, as fintech slows down now, as the fintech investment dries up a little bit, this little corner of it seems to be the one where the winners are, the companies that can provide that banking as a service. They can provide all of these newer companies, these newer fintech companies, these smaller banks, these smaller credit unions, that banking as a service, that fintech experience, while still originating loans, originating deposits in a compliant manner. This is the area where you're still seeing funding hitting, which is a good thing, which is why it's so intriguing that Lanny found this stock to put on and run through the screener today.
A really cool company. They're valued over $1 billion at the time of this video, which is July 12th. I mean, Bert, 50 years. You know this company through our prior work.
I know this company. That's what's funny about it. I know it. I doubt very many of you have heard it, but then again, not very many of you heard about SpartanNash before we started talking about them. But that's why we run the metrics. We run the companies through our screener to see what undervalued stocks there are. And Lanny, do you want to educate everybody on the 3 metrics and that bonus metric of our stock screener?
Yeah, guys, the DD, the Dividend Diplomat patent pending stock screener here. We keep it so simple. 1, the price to earnings ratio less than the S&P 500. 2, the dividend payout ratio, preferably less than 60%. And Bert's perfect sweet spot is that meat part of the bat is 40 to 60%. Third, third, we like to look at that dividend growth rate. Obviously, the history of not just growing their dividends, but at a strong rate. Then we throw in that little cherry, that icing on the top, that sweet chin music after you get pedigreed. We talk about that dividend yield. All right, guys, so we're about to dive in here. Again, we know this because this company provided a lot of core processing, core banking services for a lot of our clients from when we were, in the banking industry. Bert, hit them.
No, yeah, I think you should do the honors of this one, Lanny.
All right, Computer Services Inc. The company goes by CSI, but the ticker symbol is CSVI on this company. Again, valued at $1 billion right now, but still trading on the OTC markets as of this video.
Yeah, and they're a really interesting company. They're not small by any stretch of the means. So if you look through some of the numbers here, their revenue, they have over 300 million in revenue. I mean, and it grew, and it's not just stagnant revenue either. It grew 9% from the previous year, up from 291 million. They're growing their earnings as well. I mean, that's what's so cool about them. Their earnings per share in Q1 here was 54 cents, and their overall earnings per share is up 12%. So I think that's kind of what you're seeing here, as Lanny was hinting at. That's where the market's moving. The places like the SoFi, the companies looking for the back end processor, places like CSI are benefiting as everyone's kind of catching up to the digital transformation and signing on with that core processor. You're seeing revenue and EPS growth.
I'll tell you what, these core processors are very expensive. So they do make a lot of money from their banking and credit union partners. I'm talking hand over fist. If you want something changed on your processor, they're also earning those one-time fees relentlessly, deconversion fees, conversion fees, you name it.
Oh, don't forget if you want to terminate it too, Lanny, because let me tell you how much you're paying if you want to terminate one of these contracts.
Yeah, if you terminate those, Bert, usually they're over, what, 7 figures more than likely?
Yeah. Yeah, it's interesting. So, I mean, CSI, what the other major players are FIS, Fiserv, Jack Henry too. Those are some of the other ones. Those companies have a very strong hold on this market, and they can all charge pretty decent for the reason you said. The switching costs are very high from these. It's not fun to go through a conversion away from a company like CSI.
That's the other good thing is that, yeah, the switching costs are very high. So once a partner picks CSI to partner with, usually the contracts are anywhere from, sometimes as low as 5 years, but medium is usually 7 to 10 years, but they can go very long as well. So think about that recurring revenue model that CSI currently has as part of their.
I mean, do you really want to go through every year changing every single transaction history from every depositor, from every person that has a loan on there? Do you really want to have to change the systems you use to originate loans to open up new accounts? That's not something you really want to do unless you have to. It better be a strong economic benefit for you to pull that decision.
Exactly. Not to mention to make your customers/members very upset. But Bert, let's dive into these Dividend Diplomat stock screening metrics here on CSI, or ticker symbol CSBI.
All right, they're priced $38 flat, EPS 216, PE ratio 1759.
So not the cheapest stock, right? And we looked at EPS was really just annualizing it out because not many analysts are crushing through CSBI or CSI's financial statements right now. Except us.
Yeah, we might be the two people that are adding in here getting coverage. Yeah, that's what I'm talking about.
That's because we are
research.
The coolest.
Yeah, you know what? Maybe we'll send them some CSI, some Dividend Diplomats coffee mugs. If they retweet this, we'll send some coffee mugs here.
Maybe they'll see the Dividend Diplomats on their stockholder ledger.
Yeah. Oh, interesting. I like that. Well, regardless, when the company pulls up, hey, who's talking about us? This video is going to pop up because there can't be too many other videos that possibly are talking about CSI.
Yeah, YouTube is probably freaking out right now that
we're going to be number one on this algorithm because God help you if you're searching CSI stock.
You guys are here to see how great this stock can be for your dividend stock portfolio. Why we actually think it's a stock to buy.
Payout ratio, man. All right, their annual dividend is $1.08. That's the recurring dividend. Divide that by the 216. Perfect payout ratio, 50% on the dot. Mr. Perfect, right?
Yeah, on the money. And that's also, think about this. They pay, a nice solid dividend, 27 cents per share per quarter. Guys, what they do that's not incorporated in here either, and we'll get into the third metric. So just keep that in mind. Something else isn't incorporated in here. But 50% dividend payout ratio, so nice. For what about that amazing dividend growth rate?
Amazing, simply amazing. 14.11% is their 5-year dividend growth rate. We've talked about how they're a dividend king. They've increased that dividend for 50 consecutive years.
Incredible.
Yeah,
I mean, double digits.
usually we'll joke. I have nothing really more to say. It's just being honest. That's amazing.
So here's what else we were talking about is they also do special dividends, guys. So they actually paid a $1. Yeah, falling out of your chair there. They paid a $1 special dividend in 2021, and they'll occasionally do stock splits. They're actually very well known to have stock splits throughout their life. I think they did a stock split in 2019, one in 2010, one in 2004. So they stock split frequently. Usually it's a 2-for-1. So you are building a significant equity position over time with CSVI stock.
So let's talk about that dividend yield, not factoring in the special dividends because, hey, it's special. Can't factor that in. They're based on the recurring dividend. Their current dividend yield is 2.84%.
Solid, well above, the stock market right now on average.
So that's without the special dividend. Let's take the $1, divide that by $38 per share right now. That's an extra on that special dividend alone last year was 2.63% on its own right there. So
boom. I mean, the numbers don't lie, guys. So you're looking at, in summary, a PE ratio below 18, a perfect dividend payout ratio at 50%, a strong dividend growth history at 50 plus years of increase in the dividend at an average blistering rate of 14% with an above average dividend yield. But Bert, how has the stock price performed in 2022 and in the last 2 weeks?
Awfully. It's been terrible, down 29.5% year to date, down 33% over the last 52 weeks. I mean, down compared to the S&P 500. Yeah, I mean, interesting. It's definitely moving down. So, I mean, you look at the metrics here and yeah, it's just funny. It's funny that this is the stock that is like the metrics are looking so great for it. It's not the cheapest, but you have a great payout ratio, strong dividend history, clearly on not just increasing at 50 years. They're not just doing it like an AT&T before they cut style increase where it's a very small 1 to 2%. These are substantial dividend increases. They're 14% right there. And their yield without that special dividend is almost 3%. And when you factor in the special dividends, it's much more. Geez.
And guys, the headline yesterday was CSI reports record revenues and net income for the first quarter of their fiscal year. So guys, the stock market is really punishing this stock for having some of the best results, if not the best results they have ever had. And at one point, the 52-week high on this stock was about $64.
That one analyst is like, you should have done more.
Yeah, that's probably what they're saying. So guys,
it was the CEO's mom who was disappointed in the CEO for not doing better.
So Bert, what do you think about this stock right now?
It's interesting to add them to the watch list. It's a fun take on banking, fintech, and just technology in general. I mean, the yield's solid. I mean, technology is getting beaten down right now. Everybody knows that. So you're looking at who are the winners, who are the losers in the long term. I think we've made a case just by talking through this about the high switching costs. You're seeing the record revenue, you're seeing the earnings growth, that they could potentially be a long-term winner in a company that's going to be around increasing that dividend for decades to come. What do you think?
I mean, I think that the biggest takeaway I have is that they're growing both lines. They're growing top line revenue, they're growing bottom line net income. Because what I would be afraid of is that if revenue is stagnant or declining or, in that -2 to +2% revenue growth, because that means people are going away from this company, but that's not the case here. They are growing revenue at a blistering rate. So I really do like the stock.
Yeah. And you know what they're about to do this week, Lanny? It looks like it's going to be this week. They're about to announce that dividend increase.
Oh my God.
I was just looking at the dividend history here. It's July 12th, 2021, they announced their dividend increase. July 13th, 2020, they announced that dividend increase. July 15th, 2019, they did. So this week coming, maybe by the time this video is released, we're going to know that dividend increase. And obviously, if that happens, we're going to put that in the comment section below.
Okay, guys. So let us know what you think about this dividend king. Again, 50 plus years of growing their dividend at a double-digit rate, special dividends down 33% over the last year. Is this a great stock to buy right now for your stock portfolio? Let us know in the comments.
If you haven't already, subscribe to this channel, give us a thumbs up. Everybody, thanks for hanging in there with us. Can't wait to hear what you think about this stock.
Guys, we appreciate the love and support for Bert and Laney. Again, we are the Dividend Diplomats. Over and out.